Hi guys, so I welcome you to second part of SEBI Annual Report 2017-18. So in the previous part we have started our discussion with regard to important aspects with regard to policies and programs of SEBI, and in this particular part we are going to continue our discussion and cover some more important topics with regard to SEBI. So let's start our discussion with the topic of mutual funds. Now in this regard, this instant access facility has been provided. Now, to enhance the reach of mutual funds towards the retail investors, guidelines have been prescribed for instant access facility. So this facility is provided to retail investors so that the credit of redemption proceeds in the bank account of the investor can be done on the same day of the redemption request. So if the investor wants to sell the mutual fund units and wants his money back, this has to be refunded to the bank account of the investor on the same day he puts his request for sale. So this facility is allowed only for resident individual investors and is offered through online mechanism. So online, if you are placing the request, the money is going to be transferred to your account within the same day, and this one is only allowed for resident individual investors. So this we have to remember with regard to this instant access facility. Now next is use of e-wallets for investment in mutual funds. Now to promote digitization, mutual funds and asset management companies, they have been allowed that investors can make an investment through use of e-wallets, that is prepaid payment instruments. So investor can use the prepaid payment instruments to make a transaction in mutual funds subject to certain conditions. So there are many sorts of e-wallets and we are all using them, like there is Paytm, etc. So they can now be used with regard to payments towards mutual funds and asset management companies. Next is enhancing fund governance for mutual funds. So SEBI wants to make sure that the governance for mutual funds, it has to be done in a very proper manner. So in this regard, an independent trustee and independent director, they shall hold office for a maximum of 2 consecutive terms, with each term not exceeding a period of 5 consecutive years. So they are the different sets of persons, like trustee is a very important person associated with the mutual fund arrangement, and directors of the asset management companies, so they are some of the very important persons associated with the mutual fund. So they can hold office for a maximum of 2 consecutive terms, and one term shall not exceed 5 consecutive years. Now can they be reappointed? Yes, they can be reappointed, but there has to be a cooling off period of 3 years in between. Further, the auditor of a mutual fund, it shall be a firm including an LLP constituted under the LLP Act 2008. So only a firm can be the auditor of mutual fund. Further, no mutual fund shall appoint an auditor for more than 2 consecutive terms. So again, for auditors also there is this limit of 2 consecutive terms of 5 years. Further, with regard to reappointment of auditors, there is a cooling off period, but for the auditors, this is different from that for independent trustees and directors, which was 3 years. For the auditors, this period is 5 years. Now next is total expense ratio, that is TER. So we have studied this term many a times, that this is a very important indicator with regard to mutual fund schemes. So SEBI had earlier allowed the asset management companies that they can charge additional expenses. They can charge additional total expense ratio of up to 30 basis points of daily net assets of the schemes. And this was allowed if certain conditions they were satisfied, in order to enhance the penetration in areas beyond the top 15 cities. So SEBI was concerned with promoting the mutual fund investments in the country, and for this purpose it was permitted that mutual fund houses, they can spend more, they can charge more expenses to the scheme, and this was to be allowed up to 30 basis points if the mutual fund schemes, they are being penetrated beyond the top 15 cities. Now some changes have been made with regard to this framework. Now the additional total expense ratio of up to 30 basis points, it is allowed for inflows for beyond top 30 cities. So this we have to remember, earlier it was beyond top 15 cities, now it is beyond top 30 cities. Next is benchmarking of scheme performance to total return index, that is TRI. Now there are two indices with regard to benchmarking of mutual fund schemes. One is a price return index, other one is a total returns index. Now the meaning of these indices is clear from their names itself. A price return index is a very narrow sort of index, and this considers only the price movement of the constituents, and it captures only the capital gains of the constituents. So if you are concerned with price return index, you are going to be concerned with the changes in the price of the different securities the mutual fund has put its money in. But when you are concerned with total return index, you are not going to make yourself contented with just the changes in price of the constituents. You are also going to be concerned with the other returns from that constituents, which may be dividend income or interest payments. So these are also the set of returns which you are getting from the different components. So they must also be considered while calculating the returns index. Now since total return index, it is more broad, it is more appropriate as a benchmark to compare the performance of mutual fund schemes. So that's why SEBI has stipulated that all the mutual fund schemes, they are to be benchmarked against total return indices from 1st of Feb 2018. So this is something we have to remember, that the benchmarking has to be done in accordance with the TRI and not PRI. Next is again with regard to mutual fund schemes, and this one is with regard to categorization and rationalization of mutual fund schemes. So during the year 2017-18, SEBI has issued different sets of circulars laying down norms with regard to rationalization of mutual fund schemes. More importantly, the schemes, they have been classified into 5 groups. So SEBI has said there cannot be n number of groups of mutual fund schemes. They have to be in 5 groups, because then only it can be easy for investors to look at the different sets of mutual fund schemes. And if there are going to be hundreds of groups, the investor is going to get confused. So that's why there are going to be 5 groups only, and they are equity schemes, debt schemes, hybrid, which are equity plus debt, solution oriented schemes, and others. So these are the 5 groups which are going to be there. Further, each of these groups, they can have certain set of categories, and they have been classified so. And the mutual funds, they would be permitted to offer only one scheme per category, except in certain cases. So one scheme per category, this is the agenda of SEBI with regard to mutual fund schemes. Now next, let's talk about the intermediaries associated with the securities market. Now with regard to intermediaries, this is online registration mechanism for securities market intermediaries. So as per the announcement which was made by Honorable Finance Minister in the budget for 2017-18, the process of registration for financial market intermediaries, it has been fully made online by SEBI. So now they can register themselves by filing an online option, online application, and in this regard, a separate portal has been developed by SEBI. And SEBI has also operationalized the intermediaries portal for online registration and submission of periodical reports of all intermediaries. So not much in this one. We just have to remember that this has been securities market intermediaries, they have to now comply with different rules, regulations, application, etc. online. Next is prevention of unauthorized trades. So we have to prevent the unauthorized trades in the securities market, and SEBI is very much concerned about this aspect. So to strengthen the regulatory provisions against unauthorized trades, SEBI has stipulated that all stock brokers, they are required to execute trades of clients only after keeping evidence of the client placing such order. So if you are aware about the stock market working mechanism, a person cannot directly deal in the securities. That has to be done through stock brokers. So for this purpose, you have to give your appropriate instructions to the stock brokers, and stock brokers have to ensure that only when the instructions they are received from the client, then only they should place an order. So to ensure this, SEBI has said that all the stockbrokers, they should maintain proper evidence that client has requested to place such order. Further, it has been mandated that wherever the order instructions they are received through telephone, the stockbrokers, they should have a proper telephone recording system so that it can be ensured that the instructions they are recorded as a part of the records of the stockbrokers. So that's why unauthorized trades, they are to be prevented. And next is a review of the regulatory framework for credit rating agencies, CRAs. So credit rating agencies, they are concerned with the rating of the instruments, more importantly debt instruments which are issued by the different sets of companies. So SEBI has approved certain changes with regard to SEBI Credit Rating Agencies Regulations 1999. And more important one is that minimum net worth requirement of a CRA, it has been increased. It has been increased from current 5 crore to rupees 25 crores. So now you have to have a bigger net worth in order to become a credit rating agency. Further, the promoter of a credit rating agency shall have a minimum shareholding of 26% in the credit rating agency for a minimum period of 3 years from the date of registration. So the promoters, they shall have 26% shareholding for 3 years in CRA. Further, a shareholder who is having 10% or more stake in one CRA, it shall not hold 10% or more shares in other CRA. So this is to ensure independence of different credit rating agencies. Now next is the acceptance of EPAN for KYC purpose. So in June 2017, SEBI has clarified that EPAN or electronic PAN, which is issued by CBDT, that is Central Board of Direct Taxes, can be produced by FPIs for KYC compliance in the securities market. So FPIs, they have to comply with certain KYC norms, and for this purpose, electronic PAN would be equivalent as a physical PAN. Next is inclusion of real estate investment trust and infrastructure investment trust in the definition of debt securities. So during December 2017, SEBI has amended the SEBI issue and listing of debt securities regulations, that is SEBI LODR regulations 2008, and they have been amended to include real estate investment trusts and infrastructure investment trusts in the definition of issuers eligible to issue debt securities. So now these trusts, they can also issue debt securities, and as a result, the definition of debt securities under the said regulations have been amended to include debt securities issued by real estate investment trusts and infrastructure investment trusts. Now next one is disclosure requirements for issuance of listing of green debt securities. So SEBI in May 2017 has issued guidelines on a disclosure requirements for issuance and listing of green debt securities, and they include a criteria for the debt securities which are to be classified as green or green debt securities, the disclosure requirements with regard to the green bonds, and the responsibility of the issuer with regard to green debt securities. So these are the debt securities which are to be issued for raising money for promoting renewable energy space. So SEBI is concerned with promoting renewable energy, and that's why I said it has issued comprehensive norms with regard to issue of green or green debt securities. Next is disclosure norms for the issuers of municipal bonds. Now in June 2017, SEBI laid down the guidelines for disclosures and compliances which are to be made by the issuers under SEBI Issue and Listing of Debt Securities by Municipalities Regulations 2015. So more or less we have to remember that there is a separate set of guidelines or regulations which are there with regard to issue of securities by municipalities. And as per the guidelines, it has been provided that the issuer shall prepare and submit financial results on a half-yearly basis to the stock exchange and a debenture trustee wherever applicable, as soon as the same is available, but not later than 3 months from the end of half year. So this is with regard to listing of debt securities by municipalities. So municipalities, they need money to provide basic amenities in their concerned areas. So that's why they are allowed to raise money through debt securities. Now if they are raising money through debt securities, they have to comply with certain norms. They have to submit their financial results on a half yearly basis, and this is to be done within 3 months of the end of half year. Next is guidelines on specification of ISINs for debt securities. So during June 2017, SEBI has issued the guidelines on specifications related to International Securities Identification Number for securities which are issued under SEBI Issue and Listing of Debt Regulations 2008. So here we have to know about what is this International Securities Identification Number. So guidelines have been issued with regard to this number. So what is this number? This is the number which uniquely identifies a security. So if there is any security, it has to be uniquely identified through this ISIN number. Now if we talk about this number, it is a 12 character alphanumeric code that serves for uniform identification of a security. So using this code you can easily identify what is this security, and this is a 12 character code, and this is how this framework works. The first 2 characters, they are for a country, prefix of the country, and there are next 9 characters, and the next 1 character is for verifying digit. So this is with regard to how this number is to be generated. Next is investor grievance redressal mechanism. So SEBI has come out with a new policy with regard to investor grievance redressal mechanism, and this will come into effect from 1st of August 2018. Now as per this mechanism, if the investor has to launch any complaint against an market intermediary or a listed company, the investor can do so directly on the Scores platform, even if the complainant, that is the investor, has not approached the concerned intermediary or listed company before for their grievances. So they need not first approach the concerned company or the concerned intermediary. The investors, they can directly put their complaint on the Scores platform of SEBI. Now next is Indian securities market on a positive trend. So Indian securities market, it has exhibited positive trend during 2017-18. A total of rupees 1,10,269 crores it was mobilized by the issue of equity to the public during 2017-18, and this is very much higher than the resource mobilized during the previous year. So this is 77.5% higher than the previous year. Further, as per the annual data for 2017, which was published by the World Federation for Stock Exchanges, NSE, that is National Stock Exchange, it is placed at the first position in the world with regard to index options, and it is placed at the second position in stock futures when ranked in terms of the number of contracts tracked and or cleared. So this is very important, that if we look at the annual data published by World Federation for Stock Exchanges, so this is the global federation with regard to stock exchanges, and this has placed National Stock Exchange on the first position in index options and on second position in stock futures. Now this position is in terms of number of contracts. So if the number of contracts traded or cleared, they are higher, then the exchange is going to be on the top. And for NSE this was the case, and so many number of contracts were there, and that's why it came on the first position. And this is more or less much, I would say, very much relevant in the context of India, because there is a lot of population in India which is doing trading on the securities market space, and being such a well populated country, there would have been so many contracts which have been traded on the NSE space. So that's why NSE came first. So this was about the part 1. Now let's move to the part 2 of the SEBI annual report, and this one is trends and operations in the securities market. So the first part, it was a lot more bulky because it contained some of the very important points. The second part, we are going to just take a look at the very important trends or very important facts which have been stated in this particular report. So these are the different aspects which have been covered in the report, and we are going to just pick out the important trends and important facts. So first important trend is with regard to resource mobilization through public and rights issue. So we need not need to remember all these data, we just need to look at the broader picture. And this we can see that number of issues, they have increased. The amount of public issues, it has also increased. And out of the issues, we can see that public issues, of which of the shares and the convertible debentures, these are the figures. And if we talk about IPOs and FPOs, the IPOs, they have a major proportion. And if we talk about the rights issue, they are less than the public issues. Next is sector-wise resource mobilization. So if you take a look at the sector-wise resource mobilization, then it shows that the private sector dominated the resource mobilization efforts in 2017-18. And the private sector had a 67.1% share in the total resources mobilized. So here you can see that how the resources they were mobilized, and green one is of the private sector and blue one is of the public sector. So you can see that how the public sector, it has a less share, and the private sector, it has more share in terms of resources mobilized. Next is resource mobilization through qualified institutional buyers, that is through qualified institutional placement. So qualified institutional platform is an alternative mechanism which was introduced in 2006, and this facilitates listed companies to raise capital in the Indian securities market. So through this route, you can directly issue the securities through large buyers which are qualified institutional buyers. So this particular mechanism, it enables a listed company to issue equity shares or fully or partly convertible debentures to qualified institutional buyers. So if we talk about the performance of resource mobilization through these QIPs, then 53 issues, they garnered around 67,000 crore through the QIP route, which is way more than that was raised in 2016-17. So more or less, you can see that how the securities market is more on an uptrend in terms of the resources mobilized in 2017-18 as compared to 2016-17. Next is offer for sale through stock exchange mechanism. So if you have already learned about this mechanism in the policies part also. So now if you look at the trends part, so it says that there were 29 OFS issues. So I have not included this particular slide for the purpose of just telling you that there were 29 OFS issues. So there was this very important data which was mentioned about offer for sale, and I wanted that you should know about these important facts. Although we may have discussed in this in a separate video also, but still these are important, and that's why I have put it here. So offer for sale, it is a simpler method of share sale through the exchange platform for listed companies. So when you talk about offer for sale, it is a simpler method. So if you have to sell your shares, then if you are looking for a simpler method, this is offer for sale. So this mechanism, it was first introduced in 2012, and it makes it easier for the promoters of publicly traded companies to reduce their holdings and comply with the minimum public shareholding norms by June 2013. So we have learned that how in a company there has to be certain level of minimum public shareholding, and so that the promoters of the publicly traded companies, they can reduce their holding. This kind of offer for sale mechanism, it was introduced in 2012. So this method was largely used by government because government was not complying with these MPS norms, and using this mechanism, the government, it divested its shareholding in public sector companies. So through this mechanism, the promoters, they can transfer their holdings in a simpler way, and they can comply with the MPS norms. Now, an important fact is that this mechanism is only available to top 200 companies and not to all the companies. So it is available to top 200 companies in terms of market capitalization, and only promoters or shareholders who are holding more than 10% of the share capital in a company can come up with such an issue. So this is something that you have to remember. Now next is resource mobilization through preferential allotments. Now preferential allotments, they are covered under chapter 7 of SEBI ICDR regulations, and this mode of resource mobilization, that is preferential allotments, it is used by a listed company to issue equity shares, convertible debentures, or any other instrument which will be converted to or exchanged with equity shares at a later date. So this is more or less used for raising money by a listed company by issuing of equity shares. Now the allotments, they are done on a preferential basis to a select group of investors. So you are not making allotments to general public, you are only making allotments to a select group of investors. And if you talk about the progress during 2017-18, resources mobilized through preferential allotment, they increased by 34% to rupees 59,472 crores. So this method was also increasingly used in 2017-18 as compared to last year. Now next is secondary market. So in the secondary market, the highest share in terms of traded turnover, it was held by equity derivatives. So if you are asked which segment of the secondary market it had the highest traded turnover, then the answer is going to be equity derivatives segment. Next was currency derivatives segment. Next was equity cash segment. Next commodity derivative, then corporate bonds, and then interest rate derivatives. So you can see how equity cash segment is very low and equity derivative segment is very high. So this is something which you should know, that more and more set of transactions, they are taking place in the equity derivatives space rather than equity cash segment. Now next, let's talk about the global markets. Now, most of the equity markets across the globe, they witnessed good equity market performance during 2017. So there was a recovery in the advanced and emerging economies. And the reason I have put this slide is not because I have to tell you that the economies have recovered. I have to tell you about the different indices which have been mentioned in this report. So this is important. Among the selected global equity market indices, you have to read this very carefully. Brazil's IBO Vespa index, it gained highest. So gained highest is not that important, but Brazil's IBO Vespa index, it is very important. Next, followed by Hong Kong's Hang Seng index. So this you would remember easily, Hang Seng Hong Kong. Russia's CRTX index. So this has to be remembered. USA's Dow Jones, Japan's Nikkei, South Korea's Kospi, and India's Nifty. So it says that these indices, they have gained. However, UK's FTSE 100 index, it fell, followed by Germany's DAX index and China's Shanghai Composite index. So what do you have to do? You have to remember all these names of the indices, because and match the following question can be easily framed out of these. Now, if we talk about the turnover in the Indian stock market, then turnover of all the stock exchanges in the cash segment, it increased in 2017-18 as compared to the past year. And of the aggregate turnover, NSE accounted for 87% of the total turnover. So more or less, we are now aware through this annual report that turnover is in NSE is way more, and we have also learned that how NSE is on the first position on the list which was put out by the World Federation of Exchanges. So of the aggregate turnover, 87% is on NSE and 13% is on BSE. Further, the trading activity in the GIFT City, which is a special economic zone being set up in Gujarat. So it has BSE's India INX exchange and NSE's NSE IFSC exchange. So trading through these exchanges, the trading activity in the GIFT City, it has also started gaining momentum during 2017-18. So this has been said in this particular report. Now next one is with regard to market capitalization. So we are aware about this term, market capitalization. So this means the market value of a publicly traded company's outstanding shares at any point. For example, if Reliance has issued 1 lakh shares and the value of one share is rupees 10, then the market capitalization is going to be rupees 10 lakh. So if we talk about the market capitalization at BSE and NSE, then this market cap at NSE and BSE has been shown here. So here you can see the free float market cap. Now free float market cap is that market cap which is associated with the shares which are being traded in the securities market. They are being freely available for trade. There may be some shares which are held privately by the family members or the promoter group, so they won't be freely available on the stock market, but the free float market cap is the one which takes into account the shares which are there for freely trading on the securities market space. So here is the market cap in NSE and BSE, and you can see that on both these exchanges, the market cap, it has increased as compared to the past year, and the total market cap, it has also increased, and the free float market cap in both these exchanges is less than 50%. So out of the total market cap, free float market cap is less than 50% in both these exchanges. Now market capitalization is a very important indicator which reflects the size of the stock market. If this market capitalization is higher, this means the size of the stock market is also higher. Now next is volatility in the stock market. So it says that volatility in the Indian equity market, it has subsided, it has declined, it has reduced during 2017-18. Now this volatility is measured through India's volatility index or India VIX. So this indicates investors' perceptions of the market volatility in the next 30 calendar days. So this index, it captures what is the investor's perspective on the volatility in the market in the next 30 calendar days. So it says during 2017-18, BSE small cap, it recorded a highest volatility followed by Nifty next 50. So not much important, but during 2017-18, you have to remember that Indian equity markets, they were least volatile compared to its peers in the global financial markets. So this we have to remember that volatility in the Indian securities market space, it has declined, it has subsided. Now let's take a look at some of the important MCQs which have been framed out of this particular video. So first question is an assertion reasoning question, and the assertion which is given is total return index is more appropriate as a benchmark to compare the performance of mutual fund schemes. And the reason is TRI takes into account all dividend interest payments along with capital gains. And there are different options, and the first is both are correct and R is the correct explanation. The second one is both are correct but R is not the correct explanation. Third is A is correct but R is not. Fourth is A is incorrect but R is correct. So this we have seen that TRI is more appropriate, and SEBI has also mandated this kind of indice, and the reason is that it takes into account both dividend interest as well as capital gains. So the answer to this question is going to be option number A. Next question, which of the following is correct with regard to SEBI's move to recategorize the mutual fund schemes? Schemes have been classified into 5 groups. Mutual fund schemes would be permitted to offer only one scheme per category except in certain cases, both of the above or none of the above. So this we have seen that both of the above, they are correct with regard to the SEBI's move, and the answer to this is going to be option number C. Next question, according to recently approved changes in the SEBI Credit Rating Agencies Regulations 1999, minimum net worth requirement of a credit rating agency shall be increased to. Options are 10 crores, 15 crores, 20 crores and 25 crores. So this we have seen that as per the SEBI Credit Rating Agencies regulations, minimum net worth requirement has been increased to rupees 25 crores. So the answer to this one is going to be option number D. So friends, these are the answers. So friends, this was all about our discussion on the second part of SEBI Annual Report 2017-18. Thank you.